Hello and welcome everyone for another weekly commentary from us here at StashAway. Again, I'm very pleased to have with me our CIO, Freddy. We're happy to have everyone listening again. As you may know from the previous videos we've recorded as well, feel free to ask any questions in the comment box below, either if you're on YouTube or if you're seeing this on Facebook, wherever that may be. Feel free to ask questions. We always go through them and see if there's anything of interest, and we can address those next time. But before we get started today, I wanted to give you a little update on the upcoming events that we have planned for you. For Singapore, we have an event on the 3rd of July. It's called How to Plan for Your Retirement. We can cover, basic structuring of your CPF as well as SRS and some other benefits of that. So if you want to join us there, it's on the 3rd of July at 7 p.m. in Singapore. And in Malaysia, we actually have quite an interesting event coming up next week on Wednesday, on the 19th of June at 6:30 in the KLCC area. It's an inside look into both StashAway as well as funding societies. We're doing a joint event with funding societies there. So hopefully we'll see as many people as possible at any of those events. Now to you, Freddy. A couple of things we want to discuss today. We maybe give a little bit of an update over the weekend, trade war kind of outlook. I know it's getting probably even old for most people, right? It's been going on for so long. We'll also look a little bit at the Hong Kong protests and see if that has any effects on markets, especially locally here. And then we're going to talk a little bit about withholding tax on dividends and things like that. I'm going to ask a couple of questions that we get quite a bit from our users. Anyways, maybe you want to start and give us a little bit of an update, what's kind of been happening over the weekend. I know we talked about Mexico probably resolved on Friday when we did the last video, but it wasn't yet. But I think this all happened over the weekend, so maybe the floor is yours.
Well, avocados and tomatoes are spared. The American dining table, we'll still have them from Mexico cheaply.
Yeah.
Again, it's just another of Trump's gambit. But it does look like Trump is going to be very focused, very squarely on China in this entire trade fight.
Yeah.
But it probably doesn't pay to fight with everyone else at the same time. So we're going to continue to assume the same. However furious that the tweets is going to be with everyone else but China, we're going to assume that it's just another attention-grabbing effort into his political calculations.
Yeah.
So not really much to say other than a few bizarre statements where he claims that Mexico will buy heaps lot more of agricultural products.
Yeah.
The Mexicans were confused. Nobody ever talked about that in the end.
So he just wanted to use the trade, like tariffs, as a tool for threats for immigration, right? That's kind of what he was trying to do here.
True. It's sort of opened a can of worms where if you're unhappy about anything and the Trump administration is just going to slap you with tariffs or just threaten you. So that is an entire different ball game now in global politics. But other than that, he has a habit of withdrawing his threats. With the exception of China, he does tend to do that. So I guess the market is sort of getting used to this sort of gambits.
Yeah, I think we see also volatility
Becoming less
volatility. Markets are rebounding quite a bit actually, right? Seen some good days. What does it mean though for China then? The G20 summit is coming up soon, right? So that this is like the next, but this is where everything's building up to now, right? Trump is even saying, oh, if she
it's been getting complicated by Trump's latest statement where he dared the presidency not to go to the G20 summit. This is very humiliating. It almost sounded like Trump really doesn't want to deal with China. It just sounded like he wants to have more airtime of China and US fighting into the 2020 general election. So I'm beginning to think that this is going to be dragging on and on for a long time. I personally do not expect any resolutions for real anytime soon with US and China. So that's out of the way. He's going to keep coming back.
Yeah, no, I think that's a good wrap up on this. And again, I know we're covering this quite a lot, but this is really what's dominating the news headlines and people keep mentioning to us as well at the seminars, right? So with the trade war, Hong Kong protests, this kind of started also this week. Maybe you can give a little bit of for everyone that hasn't heard about it or has seen it but does not know what actually is going on and why, and what potential impacts that has for this region, or more so China actually, right? The relationship with China between...
Well, we have a yellow umbrella movement a couple of years back. Yeah. So there's always this fights between the local Hong Kongers against overarching rule of China. Hong Kong is supposed to be an autonomous zone, but that ends around 2046 or something. So as part of China's plan to assert more control over its own territory, in this latest effort, China is going to have more leeway in terms of extraditions of Hong Kong citizens to China for trials. So that is sort of a very touchy issue now. Remember a couple of years back, we had 5 good bookkeepers who was kidnapped into Shenzhen over promoting books that's not supposed to be promoted. Yeah, exactly. So this is a lot about rights and freedom of speech. Again, another area where the US is going to intervene, and already they did. US came in and sort of said that this is unacceptable. And so again, another arena where Trump can fire his tweets on.
Exactly.
Yeah. So nothing really of dramatic impact on markets, but just another ongoing political developments.
And a political fire for China, one more that they are currently dealing with then, right? Because the Trump stuff is coming in. Okay, cool. So I think this gives us a really good wrap up on market events or like news in general in the world, because that's pretty much anything that's being covered. But let's get a little bit more towards us and our customers. One of the questions we always get is, right, you guys invest in US ETFs, dividends, tax withholding is there. Maybe you can give us a little bit an overview of, why we still use US ETFs, right? And what's the impact actually by the dividend tax, right? Because we do have a reclaiming process that's actually going underway right now for last year.
Well, I mean, you can count the beans on the table, but there's also beans outside the table that people are not counting. There's no free lunch in finance, as the old saying goes. Everybody knows that the UCITS or ETFs would pay lower dividend taxes. Why would then US listed ETFs still exist, right? So if you really do the math over the long term and look at all the return net of dividend taxes, you realize that with very exceptional cases where yield on a particular asset is very high, say emerging market bonds, maybe even Asian high yield bonds, where the yield is so high that dividend tax savings actually matter a little somewhat, right? But in return, you have less liquid trading, more tracking error, so you got to net all that off and look at the marginal, the true differences. It's actually not that great. So in this case, however, what StashAway do to sort of mitigate this issue is, first of all, on the fixed income side, most of the ETFs that we have chosen, they have very high reclaim rates. And in fact, we are processing last year's reclaims, and I'm pleased to say that it's looking like at least 90 to 95% of the fixed income side, the dividend taxes we have, can be reclaimed. And that's by design under the QII rule. Now on the equity side, however, dividend taxes is unavoidable, and our strategy has always been to focus on asset classes that's not very high in dividend yields. It's more focused on reinvestments rather than dividend distribution. So that strategy sort of minimizes it on the equity side, and you put it at a portfolio level, impact is minimum.
Minimum, yeah, and I think what people sometimes confuse quite a bit too is it's on dividends, right? And the dividend is not the biggest part of hopefully your growth over time, right? Yeah, it's part of it, right? But not everything pays the dividend, and it's like, that's what needs to be understood, right? And it's a withholding rate of 30% on dividends, right? So we're talking on the dividend, not on your investment, right? So a lot of time when we do seminars, we get this confusion when the questions being asked is actually not the right one.
I think investors need to focus on the whole equation, and the whole equation is return minus expense ratios minus dividend taxes we have divided by tracking error.
Correct.
That's exactly the formula we look at, and there's no personal bias here. When we choose, I mean, StashAway is not standing on just US listed ETFs. We're open to anything that over time would be better for our investors. It just so happens at the moment we are mostly in US listed ETFs. And the reasons is because of the equation, net return versus tracking error.
That's right. No, I think, thank you, Freddy, for that, because we get that quite a bit, and I think the users and listeners will be actually quite happy to hear that from you directly. So again, thank you so much for listening today. Again, we have a couple cool seminars coming up at the beginning, if you write back to find out more. Also, if you have any questions, again, feel free to send us an email to support@StashAway.com. You can also call us, you can send us a WhatsApp through the app and things like that. We're always here for you. With that being said, have a great day, and we will be back with you next week.
Ciao.
Bye-bye.